This is what nobody tells you about pullbacks. So looking at pullbacks, you want them to happen, as odd as that sounds. Guys, I marked on my screen right here, $560.78 on Costco. That was the peak of this candle right here. The low was 514.04 of a candle that was 4 days later. I think that the average trader that is out there that doesn't have a good process or understand pullbacks, all they do is look at price movement saying, this went from 560 to 514 in 4 days, I got to exit. That's not true. You want pullbacks to happen. This one might be an extreme pullback, but what do pullbacks actually do? Well, they create these things called W formations. I'm going to draw over here and then I'll pull up a line chart. So you get these pullbacks. Remember, you want this to happen. You want this to happen. And why is that? Because what it's doing is it's creating a new base. It's creating a new support level. So let's say that your stock price is down here. All of a sudden it moves up to right here. Well, it can't just go forever. You need some level of support in there. So you're wishing or hoping that you get a little bit of a pullback. Why? Because it's creating that new baseline there. So the next time this stock price rallies up on you, when it pulls back, let's say it doesn't pull back to right here. Let's say it pulls back all the way back down. There will be a strong level of support in there, which then it can bounce off of and continue to climb. And that's what you see on a long-term type trade. So if looking here at Costco, $568.78. It pulled back to 514. But what do you notice about this chart? You notice that this trend, it never changed. And that's something that we're going to get into later in this video, so stick around. But I look at this and say, well, this has been quite the run for about 2 weeks. I needed a pullback to happen to then create these, look at this, guys, W formations, and the price continued to go higher. It got back above that 560 number, eventually got to about 580, and then that's your exit point. But the point of this is you got these pullbacks to happen, which are very, very important and needed in trading, which is very counterintuitive to what everybody else thinks. So the next really important point here is something that we all need to deal with, and that's emotion. Exiting too soon. Let's think about it this way. You're in this stock. You're going, and I'm not even going to use that dramatic of an example. I'm going to use right over here. I'm going to zoom in to a date and time that this pulled back, and you are in this thing, and you're marching along, and you're happy camper, and all of a sudden, look what happens on this day. You're at about, let's pick a high here, you are at $455.20, and it drops in 1 day to $441. And you look at this and say, oh my gosh, this thing might pull back, and it might just go lower and lower and lower. Well, that's not the case. And this is why the majority of traders miss out on gains. They exit too early because they cannot handle or really understand that you need to have those pullbacks. So you'll often listen to me on a trading show and say, oh, this is great. We're marching right along, but this is a flagpole pattern. This is something that goes straight up. I'm actually going to show you Apple right now. Apple is a very interesting stock right now. It's at all-time highs. And if we just look at this, what do you notice with Apple here? It is just gone straight up. It's gone from about $190 to $215 in a matter of 2 days. I look at that and say, what's going to happen? Well, what's going to happen is this. It's going to go straight up. It's going to create this flagpole pattern. This is the flag, and it's going to pull straight down. Why? Because it doesn't have those pullbacks in there. So for Apple to have any type of momentum going forward, you need to have this and a pullback, and then you take off. This right in here is where a lot of traders would exit because they say, well, I just went from 190 to 215. I don't want to give back these gains. They don't think long term. They don't think to themselves, oh, this can go to 230. It can go to 235. All they think about is, I can't lose a couple of percentage. I can't lose 3%. I need to exit this thing. And they're missing out on the long run, the long game. So if we go back to that Costco example, I want to show you guys how long Costco ran and how you should not have gotten out. And I'm sure that a lot of people got out. But this goes to our third point, which is trusting that trend. So look how many times Costco kind of ran up. So here's where we entered, right around here. This is back in 2021. And you can see here, it's kind of sawtooth. You had a lot of pullbacks in here. They're small, but they're really not that small because the chart is zoomed out so far. But look at these pullbacks that I'm drawing in. There were so many times that you could have said, even up here, look how drastic these pullbacks were. Look at this one right here. Look at this one right here. This thing pulled back from that 480 number down to about 430. And somebody could have said, I need to get out. This has been just dropping for multiple weeks in a row. But that third point is what? Trust that trend. If you trust that trend, I promise you, over a long career, if you stick to it, you will do very well. Why? Because you're going to be able to stay through this and have the ultimate confidence that, yeah, it's going to pull back over a month period, but there's no reason to exit. Look at this. Your trend was still above 80%, and look how much further you climbed. You were able to climb all the way up here. So let's go to that low. Let's go to the high and then the low. So this high right here, about 450. This low, call it 430. Had you exited in here, you would not have come up here to 560, 570, whatever that price was, where you ultimately exited. That is the big point here. So I actually get this question a lot on my live streams that I do multiple times per week. And it is, hey, Mo, should I exit here? I see a stock pulling back. Should I exit? And typically the answer is no. Sometimes yes, sometimes it's take profits. But the point is, there's other people that you can turn to ask these questions. You don't need to be by yourself. I can tell you that trading can be a very lonely island if you try to attack it by yourself, not having a mentor, not having other people that were once in your position. So click the link in the description below. It's my Patreon. It's $25 a month right now. Let's go to that third point. So that third point is so important. Trust the trend. I've said it a million times. The trend is your friend. And if you trust it, you will do very, very well. If you don't trust it, it's going to go against you and you're going to leave positions way too early and leave so many profits on the table. So I made another video on when to safely enter and exit a trade. Go click on that one. It'll run perfect correspondence to this one.